Yeah, welcome everyone to another week in review. It's been, I guess, a week full of surprises in many senses. Some of the events that went down over the past few days are, fairly unprecedented, and a lot of stuff happened that I think few of us expected. Major hedge funds facing potential insolvency issues. Prices falling through the sky down to levels not seen since really before the last bull run even kicked off, and issues with firms freezing customer withdrawals as well, that sort of dominated the headlines over the past few days. And really there's been a lot of negative sentiment in the air, and we'll dig into why this is and what it means for the coming weeks and months. So to kick us off, Tom, do you want to talk about what happened at the start of the week with Celsius and what's going on there?
Yeah. Hi everyone. Pleasure to see some of you back. Like last week, I think like towards the end of the week and over the weekend, there were more and more like rumors of crypto lending platform like Celsius having problems with solvency, with liquidity. They were broke. So the rumors were like swirling around around Twitter. People were saying they took like a big loss, like with the UST collapse, Terra's like stablecoin collapse, and there was speculation also that they were suffering from the staked ETH versus ETH like parity, like DPEG, I guess, on Lido. Basically there were a lot of things going on that like indicated like maybe Celsius was having like liquidity troubles. And I think like late on Sunday it was, the firm announced that they were gonna suspend withdrawals, customer withdrawals. So anyone who like put money into Celsius for them to like manage for them could not like take the money out anymore. They couldn't, like the accounts were like basically frozen. You couldn't do any swaps. You couldn't do like any of the. You couldn't use any of the products that like they usually offer. So obviously that sparked a lot of conversation and a lot of like Celsius is huge. It's a big company. It's basically it's called in the crypto space like a CeFi company, like which is like a centralized like custodian for your funds. But they use like DeFi, like instruments like Aave, Lido and stuff like that. So it was a way for market participants to like kind of just like trust their money to like a company that would like do DeFi for them. So now that they've paused like withdrawals and everything, they've got a bunch of regulators looking at them. Regulator like the SEC is looking at them, and like the SEC, and regulators from Texas, New Jersey, Alabama. I think the other one is Kentucky. Like state securities regulators are like investigating the situation. So it's been major news, and I think that's about what I've got to say about it. Am I missing anything, Christian?
That mainly covers it. I mean, I think we've seen kind of from on-chain data, there are certain things that we know. Like it's pretty widely known that they had big position in Lido staked ETH. But there is also this whole lack of transparency thing, which we'll also talk about in our next sort of topic. There's a lot of stuff we don't know, like how much risk they were taking on, and just to what extent they were kind of playing around with customer funds. I think what's striking about this really is kind of just the question it raises about the sort of risks anyone takes when they basically make a deposit into one of these projects. I mean, we know about like smart contract risks and that kind of thing, but at least there's kind of no one controlling that, and there isn't like a terms and conditions clause that enables companies to kind of make these decisions. I think even Coinbase did something similar like a month ago, where it turned out that they'd made this amendment where it was like, oh, if we go bankrupt, we can sort of withdraw from customers' BTC or ETH, for example. So yeah, I guess a question to ask there is, should we trust any of these CeFi or third parties, or should everyone be kind of aiming to cold storage and solutions like that? Do you have any thoughts on this, Mitchell?
I don't trust anybody. I mean, that's kind of a simplistic answer. So the long answer is that there's an element of risk management involved in using any sort of third-party platform. And there's also trade-offs. So when it comes to wallets, for example, there is indeed a trade-off between custodying your funds on exchange or self-custodying, because you're taking on a lot of the risk of management when it comes to ensuring your own security. If you make a fat finger mistake, it seems a lot more likely that you do that when you're messing around with multiple cold wallets. So there is that risk. But when it comes to trusting third parties, especially on interest-bearing accounts, that interest doesn't come from nowhere. Most of these places we're making unsecured loans against that collateral that you're providing them. So you have to understand that whenever you're earning some form of yield, that yield is happening because you're taking on additional risk. So risk isn't necessarily a bad thing. There's a lot of areas in your portfolio, like the pick of the month, where you're introducing additional risk intentionally to increase the overall return profile of that portfolio. So using a third party falls into that equation to a much lesser extent, because we're only talking about returns of like 5 to 12% a year. But it still falls into a similar equation where you have to be thinking that this is a relatively safer investment, but even still, it still has the potential for losses or illiquidity if like in a situation like Celsius's, they're facing a crisis and you're not able to withdraw your funds at the time that you want. I doubt that depositors will experience a total loss of funds. My suspicion is they'll probably be able to reimburse depositors for most of what they deposited, or it just might be a timing issue where depositors will have to wait a few months to get their money out.
Yeah, to add to that, I do think I've read somewhere that it's not that they're necessarily lacking collateral. It's just that a lot of it is staked in like on the Ethereum's beacon chain. So that basically like a lot of the liquidity is frozen up till the merge happens. On the other hand, I also saw like an article on Wall Street Journal saying that like some of their investors that had led their Series B round, I think it was at the end of last year, the Series B's funding round were these investors were not interested in bailing the company out. So it might end up not having outside help, but it might end up being okay after all if Ethereum transitions to proof of stake relatively fast.
Yeah, I saw the Celsius token took a very hard hit as well. It was down about 50% on the day this happened, bringing its peak drop from all-time high to just about 99%. And then interestingly, there was a short squeeze the following day where sort of rallied 300% in a matter of minutes before collapsing again. Do you have any explanation for why that might have been, Nivesh? And were you following that at all, that drama?
Yeah, that's not too difficult to explain. I think a lot of listeners will know about it. I think it's just that people saw a lot of negativity around Celsius, and they just thought that they can make a buck by shorting it. And probably a lot of people shorted it, and some whale or some shark saw that, and obviously that means that you will get a lot of liquidations to the upside, and all that money is yours. So yeah, that I think anyone who's playing with futures, I've always said this before, that you have to take care of the funding rates, and that is like one of the most important things. Following that will be open interest volume, and such things to monitor if the market is like too inclined towards one side. It's just as simple as it is. When it is too much inclined to one side, then there will be a liquidation. You can be like 99.999% sure of it. And yeah, I just wanted to add one comment about trusting centralized parties as well. It was like it's not about they are going to run away with your money, but I think this week we realized that they are not smarter than us to even think better than us. Like, as far as I know, for the past 3 months, we have been preparing for a bear market. And as far as all of us in crypto briefing know, that our management has been preparing for a bear market for the past year. So for $1 billion fund managers to be reckless and to hold on leverage, even in such macro conditions, even in such bear trends, you can understand that self custody has to be something that, it's your money, you protect it, and maybe if you had it beside and not on Celsius or all in some project directly associated with them, then maybe you would have been better off. No matter, you would have been liquidated, but you would have known that risk, and you would have a chance for yourself to protect that liquidation from losses. But now everything is in their hands, and they were wrong, and I would say that even worse than we would have thought.
Yeah, thanks for that, Nivesh. You made a very interesting point there about basically trading futures and the importance of funding rates. On kind of a related note, I wanted to pass it over to Nathan. How does sort of trading futures differ from the position where we were at in, say, 12 to 15 months ago, when prices were really rallying and there was a lot of momentum in BTC and ETH, and later a lot of sort of low cap assets, versus where we are at today, where we're now 7 to 8 months into a decline with no sort of sign of a relief, and an extremely kind of precarious looking macroeconomic backdrop. How do you sort of navigate the two when it comes to like futures trading, and is there a different strategy for the both that works best? I think we just lost Nathan, but he's come back. We'll just invite him in quickly.
Sorry about that. Can you hear me okay?
Yeah, all good. Go ahead.
Yeah. So I think last year we saw a few things in the futures market. So when we had the crash at a similar sort of time, I would say what it was about July last year, we had the big crypto crash, and the futures market was moved into, I think, a negative. So the market sentiment was very bearish. I think now we're seeing that the spot price is still pretty much the same as the futures price. So we've got a little bit of difference there. But I think normally what I've seen in the past is when the futures price is a lot lower than the spot price, then that's when people start to look to get into the market, and they think that there might be a bottom near. So the fact that we've dropped from 32,000 to 20,000 and the market is still not in contango, in backwardation, I think that's quite not a good sign. So I think once we start going into backwardation for a period of time and the funding rates get heavily negative, I think that might be the time when we might be looking like a bottom. But strangely, that hasn't happened yet, and you think that Bitcoin's lost well over 50% of its value since the highs of the year, around 48,000, and that still hasn't happened. I think that's quite a concern for me, but I think it's worth keeping an eye on backwardation in the futures market, and that would be something that I'd be looking at going forward. The positioning on the COT, that's coming out later on today, so I think that comes out about on the Chicago Mercantile futures positioning, so that would be very interesting to see what happens, because a lot of professional traders were still interested in buying this market, and I don't know how that's going to change. So obviously the data comes out on the Tuesday, so that would be a day before the Federal Reserve, so it'll be very interesting to see what professional traders were doing, because they're normally right. So if we see a large dump in this week's commitment of traders report, then that will probably not be a great sign. But if the set of professional traders are expecting the market to still go higher and they were hanging on to their long positions going into the Federal Reserve meeting, that would be quite interesting, and that would maybe increase the probability of some type of rebound from 20k.
For the non-traders out there, Nathan, can you explain what backwardations it is and what kind of signal it is?
Yeah, sure. Yeah, I think that's a good point. So when the futures price moves underneath the spot price, that's when the market goes into backwardation. So normally, markets being forward-looking and generally positive and bullish towards crypto, typically, they're in contango, which is they're higher than spot, but at the moment they're nearly almost even. So you're not really getting a lot of signals from that. But when you do go into backwardation, it's normally a contrarian signal, especially if you're seeing a huge deviation from the spot on the futures price. The larger the deviation, the more chance of the market being wrong on its future pricing. So we didn't see a huge backwardation in the market last summer, and it lasted for a very short period of time, so that was a good signal. So generally, when backwardation is lasting for a long period of time, and maybe the price gap is slowly getting wider and wider, then that could be taken as a negative sign. So I think there's various factors you have to consider, but I would suggest putting it in with the funding rate. So a heavily negative funding rate and backwardation, it could be a sign that the market's maybe a little bit wrong on the pricing in terms of where its expectations are. So those are all things that I'll be looking at going forward. If we do go into backwardation and we break 20k,
Great, thanks, Nathan.
Thank you.
I remember it was just not even a few months ago where people were calling 20,000 on Bitcoin preposterous.
Yeah. I think if we break under 20k, it's going to be very, very bad. So I would say it's an important level to watch this weekend.
Yeah, I mean, it would be the first time, right? The first time Bitcoin has fallen below a previous cycle high.
And I think the 200-week moving average, you got to watch that, because as I understand, we haven't had 2 weekly closes underneath that in 7 years, so that's around 22,300. So if we close underneath it this week and we get further away from the moving average and move down, then that's such a bad sign of a protracted market and a potential crash. Another price crash coming. So, not to sound too bearish, but those are the two things I'll be watching.
Yeah. Yeah. I guess this brings us on to a natural segue about the kind of the state of play and the state of the market as is today. And then we'll talk about another sort of entity this has impacted this week. So we've obviously mentioned the 20,000 level and the importance of that. But I mean, how much worse can things get? Right, like the current macro climate is kind of the buzzword that people keep repeating, and we saw this week another 75 basis point hike from the Fed. Is there more pain ahead that's not priced in? Do you think a bottom is in sight, or is it about to get much worse? Do you have any takes on this? Sure, Nathan. Did you want to go first?
Yeah, sure. So my first price target would be 12,000 if we break underneath there. I am gonna throw this one out there, that there was a similar move. I think it's a Majesté decree in the South China Sea for China and Taiwan, so that's something that I will watch out for. So they tried to follow a similar thing. I don't know if anyone's seen this story, but I have been writing about it. They enacted a similar kind of law that Russia did before they invaded Ukraine. So I believe there's something that's also spooking markets in the background. I'd watch out for that if that happened, and bear in mind that China's a very significant Bitcoin holder. I'd keep an eye on that in the background, as well as obviously the Three Arrows capital. But I think for me, price targets 12 and 9,000 if all these bearish news factors continue to play out, and especially the China one.
Nivesh, what's your take? Is Bitcoin breaking below 20, and what levels are you buying at?
It could definitely break below 20, but I would say, in my opinion, it's a 50% chance right now, because there's a lot of panic in the market right now, and I am banking on the negative sentiments to drive some sort of recovery. But as Nathan mentioned, we are not really in backwardation right now, so we are not really seeing a negative liquidity from the futures market, which can potentially act as a catalyst. So it can fall below 20k, but I've said this before as well. Trying to catch the bottom is risky, because you will be let's say you'll be playing around with 100% of your capital, and it's okay, you can catch the bottom later or before, but I've experienced this, that when you're trying to do this and you are wrong, then I don't know how good others are in handling their emotions, but I haven't been that successful. So I think I'm living in that tension, trying to catch the bottom, then going on excess leverage. These things are harmful. So I'm
months and months away. I think at that point I might start putting my hand in my pocket a bit and start DCAing into a few bits and pieces. And hopefully, we'll get some nice, good, cheap deals that will fuel my way to victory or riches or whatever it is at the top of the next bear market, and I'll be rolling around in my Lambo, and we'll all be happy. There you go.
The top of the next bull, yeah. No, you just said down 50%, but they could go down another 90%, and yeah, that's something. Seen a lot of people saying similar about fungible coins in recent weeks, and yeah, it's pretty true. And we're kind of getting a reminder of this lately, and yeah, I think that's, I guess, something for people to be cautious of as well. That yeah, the stars of a bull run aren't necessarily the ones that are able to weather the downturn when it comes, because there usually always is one. So, Anne, you said about how you're sort of looking at the kind of JPEGs and aiming to get stuff that might be remembered as like pivotal in the early history of NFT technology in 20 years. How do you identify those from just your standard, like the ones that are going to disappear and eventually go to zero? What are you looking for?
My lord. So certainly something that's in relatively low supply. For starters, because obviously scarcity is a thing. That's why so much art from hundreds and hundreds of years ago has value. It's two reasons. One is that it's scarce, and the other is that a lot of it is kind of like a seminal piece of art, isn't it? From like a really special moment in history, or it's from an artist who developed a first particular technique or something like that. And so you get these sort of pieces that are kind of like, they kind of stand out, and they're kind of exemplary of something or another. And if they become, or if you get an artist who manages to keep that up for a sort of a decent duration of time, then their work can eventually become very, very valuable, can't it? So it's a case of, within the crypto world, just trying to work out, and this is where it's difficult for me, because I'm not a sort of computer sciencey type educated person. My background is in film and art and those sorts of things, but it's a case of trying to look at these JPEGs and try to work out which were the first ones to do a certain thing. So obviously you've got your CryptoPunks. They were these kind of obviously they're just the first kind of generative projects, aren't they? And they have this really nice aesthetic that really kind of resonates, or like it appeals to like the I think, to me, like to the kind of more computer programmery side of things. And then you've got like your Bored Apes as well, which again are not a first in terms of being generative or anything, but again, culturally they seem to have really, really resonated with people and really appealed to people. I don't think it's just the fact that people start getting mega rich off them, but that definitely helps. But Bored Apes will be remembered in years to come, so I won't be sweeping up any of those because they're well beyond my price range. But looking around at some of the Tezos artists, for definite, who have been around for a long, long time in the generative art world, there's just a range of people, really, and it's just a case of going off and doing the research and trying to find that art that can only exist because it was made on a computer. That to me is like the kind of the key to it. That's what's really important about this particular art space. So yeah, art that's not just made on computer, but can only have been made on a computer, and is ideally scarce. And if it comes from sometime last year or earlier on, then so much the better. That's my kind of plan, really, to keep hunting for that.
Do you say made on a computer because that's more like internet native and more applicable with tokens and blockchains?
So every art has its own language. So, for example, photography is writing with light, okay? And it's all about taking that image. Film is cinematography, which that word, just in the same way that the word photography breaks down as light writing, cinematography is all about movement. And so the art of film is in the editing and so on. Poetry is all about the art of grammar and vocabulary and stuff like that. And then painting, is about colours and whatever. And so there's some crypto art that could just as easily have been made on a canvas. And so to me, that is less that's not true crypto art. It's just standard art that was done on a computer. So the challenge is to try and find pieces of art that can only have been made on a computer because of the way, or they're pieces of art that look the way they do because of the way that they were coded. So, for example, CryptoPunks, they are the way they are because of the algorithm behind them. Whereas Bored Apes, kind of like a bit that, but they also fundamentally like hand drawn originally, sort of thing. You get some of these. There's some really, really great artists doing stuff on Ethereum. I forget the guy's name, but he does. He's kind of like sort of porcelainy looking statues with loads of gold effects on them, and they're kind of a bit grotesque and gothic, and they look absolutely amazing. But to me, they're more like sculpture, because really what the guy is doing, I'm assuming this guy is he's sculpting. Might be doing it on a computer, but fundamentally it's sculpture. So to me, again, that's, whilst it looks great, that's not something that I would personally choose to collect. It's got to be something that could only have been done through the use of a computer, if that makes sense.
No, yeah, it does. I'm a fan of generative art, and a lot of the most sought after stuff of today. So stuff like Fidenza and CryptoPunk.
Yeah.
These are like examples of assets that are like just purely it's like they were made for blockchain, right? Like the relationship between the two is so close. But at the same time, there are some artists that have come through and really smashed it in NFTs over the last year, and their stuff isn't necessarily computer made. Like someone like Drift, right? Like what he's doing is so that, for those not aware, Drift is like a photographer free runner who kind of goes to like climbs buildings and bridges. Yeah, and his Instagram is really impressive. You see all his shots on there, like standing hundreds of meters in the air above Times Square, and he's like takes a photo of his Vans trainers in each one. And yeah, it's like an interesting story on it that was in the New York Times about how he like came close to being in prison for a while, and he kind of got out and dropped this first NFT collection, and it was like a resounding success. And yeah, there are others like Xcopy as well. Like, what do you think of that? He's like a glitch artist, but he's like the first one and has inspired many others.
So actually, like glitch to me is like something that is I tried to collect some glitch pieces. I haven't got any Xcopy stuff, but I've got some of the other Tezos things. And glitch is completely to do with technology and stuff like that. So I think it's like, to me, it kind of does count. And I think these artists, like, it's good that you're pointing out someone like Drift, actually, because I think they kind of show the bull case for NFTs. So, and by that, I think I mean the technology in general and like this cultural side of crypto. Because NFTs have enabled artists around the world. What they've done is they've opened up a distribution channel for the artists. And they have made it possible for millions of artists around the world to monetize their work in a way that has never been possible before. Okay? And this same problem that there are sort of starving artists out there who need to monetize their work exists in all art forms. The music industry, I mean, look at what Web2 platforms like Spotify have done to the music industry, in the way that the revenues there are generally funneled very much away from the artists. So you've got, I was listening to a really great podcast this morning, in fact, where there's this guy, I need to find it, but this guy was talking about, he had to write, I think, did he say it's either 250 or 850 songs for this music distribution company, and or a friend of his did anyway, and 2 of those songs got picked for use. There's that thing that as an artist he has to spend that amount of time. Obviously you can imagine the amount of time it takes to do that, to literally create, I'm sure it was 850 songs, and 2 get picked. Now if you're within the world of NFTs, there's somewhere along the line someone's going to generate a really good platform that enables these artists everywhere to monetize their work, just as the JPEG artists have been able to monetize their work and the photographers have as well. So there is a definite case for the technology. There's multiple kind of art forms that are waiting to take advantage of this. I was really interested to read Jacob's article this week about attending Consensus and the failed film auction that happened there. It's kind of in a way surprising, although also not. I think like very small indie films might do really, really well with NFT technology for funding and stuff like that as well. But yeah, definitely bullish on NFTs.
Cool. Yeah, thanks for your insights and there. Yeah, lots to consider. And yeah, potentially some deals to scoop up for those who have a keen eye and are following things closely. Cool. So,
Can I ask a quick question to Christian?
Yeah, sure. Go ahead.
Anthony, what are your thoughts on some of the peak NFT stuff like the nouns and loot and things that may not in itself represent art, but some other potential to use in a larger ecosystem, or something that just hasn't been tried before in NFT format?
I think the thing with nouns and loot, in fact, I think both of them are more or less kind of like firsts in their kind of field and what they're doing and stuff like that. So I do think they're valuable, and I think it's also really useful when you look at something like loot and the way it's connected to games and so on. Sorry, my phone was ringing, so I was distracted. So yeah, loot is because there's a big thing about this NFT technology is like, where are the users going to come from? And I do think it's the younger people probably, because a lot of this generative art is probably a little bit more appealing to a slightly older audience, I would guess. Like, I don't think the youth of today are coming home raving about the latest Mondrian to get found in someone's loft or whatever. I think the young people are into kind of gaming and stuff like that. So they are going to kind of like, I think they're going to get drawn into the space, and stuff like loot is going to appeal to them. And the way that it has these kind of very open potential use cases that we can't be sure like exactly what it's going to be for in the end. It could carry on, it could continue to be used, it could spawn new uses within metaverses or whatever. It's still very open like that, but additionally, like it's a really significant product from a really significant piece of time, and for that reason I think it will carry on having use. And then when you look at nouns, the way that they're kind of part of that whole DAO type thing as well, again, to me it's really, really significant. And I think I actually think the artwork and the nouns is great. Love it. So
Thanks, Ant. Yeah, to close us out, another story of this week, kind of similar to the Celsius case, but one that's still ongoing. So it kind of makes sense to talk about now and sort of consider the potential impacts this could have. Is the one that a couple of us mentioned already, which is the 3 Arrows Capital liquidity crisis. Now, for those not aware, 3 Arrows is one of the biggest crypto hedge funds in the world. Launched just about 10 years ago by Suzu and Carl Davis, and grew to a size of where it had over $10 billion in assets under management at its peak. Started with 1 million 10 years ago, so that's quite a substantial return, like a 10,000x return. These are two guys who have sort of become celebrities in crypto as well, particularly Suzu over the last year. Became better known over the course of the bull run, pushing narratives like the super cycle, which is this idea that bear markets wouldn't necessarily happen to the same extent that they have in the past due to mass adoption of crypto and increasing interest. They were very early to projects like Solana, Avalanche, and Terra, a kind of an array of DeFi applications, but also these last year alternative layer 1 networks that are kind of competing with Ethereum in one way or another. And yeah, they have been consistently sort of bullish throughout last year, and at times they were kind of accused by the community of perhaps like deceiving their followers, because they were often sort of indicating that they were long in their posts, but then prices of some of the assets they were talking about were going down in value, and they obviously had kind of influence and sway and such size that they could potentially move markets. And this week, following the kind of Celsius drama that kicked off late Sunday, early Monday, the next day there were rumours of another a big entity, like a big fund in the space, having trouble, and then it sort of escalated, and more people were talking about how 3AC might be facing some problems, and this kind of just spread over the course of a day. And at first I kind of saw this, but found it quite difficult to believe because of the size of Three Arrows. Other than the various layer ones and DeFi projects they've sort of backed and traded with great success, they've also invested in many projects acting like VCs in a way, stuff like Starkware and Deribit, which have themselves gone on to be pretty successful, as they really are a pretty prominent player in the space. And yeah, these rumors were surfacing, and then we could see from on-chain data that they were looking to sell millions of dollars worth of Lido staked ETH, similar to how Celsius was, to sort of recover some of its liquidity. And Suzu and Kyle were pretty silent throughout, like while these rumors were spreading. Obviously a lot of people were reaching out to them. And then I think it was on Wednesday, Sue posted a one-line tweet where he just said, "We're committed to working this out." You can pull it up here, the exact wording. So he said, "Yeah, we are in the process of communicating with relevant parties and fully committed to working this out." And now when he wrote this, it sort of became immediately obvious to everyone that this was real, and they were in some form of trouble. And although they haven't said much over the course of the past few days, various firms have come out and sort of confirmed the updates that they've been liquidated and had these margin calls that are causing them to have to repay back loans. One of the rumors is that they were offering firms like returns of 8% yield, possibly because they were depositing it in something like Anchor protocol, which crashed when Terra did a month ago. And so a lot of this stuff is some of it's confirmed, like the firms like BlockFi have confirmed this stuff in various news reports, but a lot of it is speculation too, so we still don't know the extent of the damage. But given the size of 3AC, this is like a big story either way. And today they've kind of come out and revealed in a Wall Street Journal article that as well they lost $200 million on Luna, on their bet on that. So yeah, this story is still ongoing, but yeah, it's pretty severe. And I guess to hand it over, Tom, you've been following this a little bit. How worried should we be by the 3 Arrows story, and should we care? Does it impact everyone, or does it just mean a fund goes bust and we all get on with it without them?
I am less worried than I was when I heard the news, because like BlockFi had like exposure and Genesis also had exposure, but Genesis, like during weekend review, like the Genesis CEO just tweeted saying that they'd mitigated like their losses and that customer funds would be fine and everything like that. So it looks like some of the people who had like money with 3AC are like, it's not like there's like massive contagion so far. Like I haven't seen any like story of someone like blowing up because of 3AC blowing up. So obviously there's other players. We'll have to like wait a little bit for things to continue. But even though it is massive news, it could be like one of those like good case scenarios where like everyone else was practicing like responsible risk management. Otherwise, like I think there's something a little bit cultural around like 3AC blowing up. It's not just like any fund. Like as you said, like Suzu and Cal Davis were very prominent in the crypto community. I mean, they still are, I guess, but like it's kind of these are big names going down, and they mean something to the community in a way that maybe Celsius doesn't. Celsius, like, even though there's a lot more customer funds involved, Celsius were not like as publicly like prominent as Suzu and Cal Davis, and there's something a little bit like tragic about everyone calling them like everyone saying they were like like for years people have been saying like that Suzu psyops sent everyone into buying his coins when he's shorting, and it turns out no, the man was just bullish the whole time. So there's, I think, even if there's no contagion, there's still a big like moral, like emotional impact on the community that for 3AC to blow up. I don't know how everyone else feels about it, but that's kind of my take.
Yeah. Nivesh, what are your thoughts? Was there any psyops from Sue or Kyle? And are they going to make it through this? We've lost you, Nivesh. It's not coming through. Mitchell, did you want to take this?
Can you repeat the question?
Yeah. Have Three Arrows, so Sue and Kyle, the co-founders, engaged in any psyops? Do you think they did anything wrong with the way they kind of conducted themselves over the course of the bull run with their various bullish takes on Twitter? And do you think they'll make it through this?
I mean, I don't understand why they had to be deceptive in the way where they'd tweet one direction and then trade against it. Like, that was, to me, that's kind of slimy. Even if it wasn't intentional, like, it seems a little bit irresponsible. And I still don't know why someone would do that, because I can't imagine that if you're $1 billion hedge fund, that there's enough money to be made counter trading your own tweets. That's something like a low level, like a YouTube influencer would do. So that part bothers me a bit. The question as to whether 3AC is insolvent, I think it's too early to tell. Obviously, like these rumors, the rumor mill's going full blast right now, especially with Suzu not answering his phone calls. It could be for like a pretty understandable reason. It's possible that he got subpoenaed or something, and his legal counsel has told him not to contact anybody. So, I'm not sure. I think it's more of a wait and watch situation. See what's going to happen.
Yeah, I would agree with what you said there. That they're obviously silent at the moment, but there's a reason for that. It's because lawyers would have told them to be silent. This is exactly how it was with Terra, like last month as well, and it's just like what lawyers kind of advise, and you can be sure that they'll sort of have lawyers on the case. I mean, what you say about the kind of responsibility, I think, is very true as well. Because I think something you notice in bull markets, or something I've picked up on, is that when there are like relatively prominent people, when there's a bull market, they often pick up their followers can like 10x like their portfolios do. And that kind of happened with Sue, especially last year. He had the podcast appearances as well on stuff like Up Only, and a lot of people who maybe came into the space just last year, sort of, he was one of the first people they maybe come across because he was by then pretty well known. So yeah, I think it's kind of difficult for some of these personalities sometimes to sort of acknowledge the position they're in and how they might be sort of responsible in a way, and there are kind of ways to act on Twitter when you have a following of that size, and yeah, maybe that was something they could have dealt with better. And yeah, just on the point about if they can kind of make it through it, you have to consider that these guys, like, although they seem to be in trouble now, we also know from the past that they have, like multi-million-dollar property portfolios, and they've kind of done this for a long time. Like, it's public knowledge that Sue has like multiple properties. So yeah, even if their fund gets like burned and there's down to a like lesser size than it was at the peak of the bull market, given their experience, I wouldn't be surprised if they sort of make a comeback. And yeah, what it means for the broader space, yeah, I would agree it's kind of probably too early to say right now, and I imagine over the course of the next week and coming weeks we might get further details on that and things should become clearer. So yeah, we're just coming up to the hour. Does anyone have any final insights or comments to share before we close out?
I don't think it's an unreasonable time to start dollar cost averaging in if you haven't already.
Yeah, that's a fair comment, Mitchell. Yeah, I know some of us have been already, so yeah, good time to mention that. And I guess on the 3 arrows note as well, something I wrote in today's newsletter, which is going out, also on the 3 arrows story, and something that is relevant to everyone, is you can be the kind of the top of your game and the as high as it can get in a bull market, and you can be this amazing trader and have an amazing run. But if you don't manage your risk, you can get burnt no matter how good you are. And it's not just 3 arrows that this has happened to. We've seen others that had incredible streaks last year, and now we don't hear from them anymore because they've disappeared forever after losing everything. So I think this story is a lesson in kind of knowing about risk and taking on leverage and this kind of thing. And yeah, I think that's something to think about as we head into the weekend as well.
I will say one more thing. I think that it's advantageous to keep only a percentage of your total net worth in crypto that is not more than 50%. So, for example, only about 30% of my portfolio is in crypto assets. I own a lot of other things like stocks, bonds. Obviously, those haven't performed that great, but during a bear market, when you are fully deployed, you still have the option of shifting the allocation in your portfolio. So, for example, right now I might be 30-70, but I might switch to, say, a 60-40 split, moving more of my assets into crypto, and that can still give you the opportunity to get exposure even if your capital is fully deployed. And it's something that, if you have the option to do that, I would strongly suggest people try it out.
Cool. Yeah, thanks for that, Mitchell. Something to consider as well on allocations and not being too exposed to this market, because it can go violently up but can go down just as hard. Okay, I think that rounds us out. So yeah, thanks everyone for listening. And yeah, although there were some gloomy topics discussed, I hope everyone comes away with some valuable insights from. Thanks everyone.